I need to tell you why you're losing money. It's not your entries. It's not your risk management. It's not market conditions. You're losing because your trading system has too many rules. Way too many. You've got rules for entries, rules for exits, rules for position sizing, rules for market conditions, rules for confirmation, rules for when to trade and when not to trade. You've probably got 20 rules minimum, maybe 50 if you're really trying to be thorough. And you think that's good. You think more rules means more edge, more protection, more sophistication. You're wrong. Those rules are killing you. Not because they're bad rules, but because you can't follow them. Nobody can. Under pressure, when the market is moving, when money is on the line, you cannot execute 50 decision points correctly. It's impossible. So what happens? You pick and choose. You follow the rules that are convenient and ignore the ones that aren't, which means you're not following a system at all. You're just making it up as you go and calling it strategy. Today, we're going to talk about how some of the rules you put in place to ensure discipline are actually sabotaging your discipline. Here's what I learned after 8 years of losing. The best system isn't the most complete system. It's the most executable system. And executable means simple, brutally simple. I'm talking 3 rules, not 30. 3. That's the entire system. 1 rule for what you trade, 1 rule for how much you risk, 1 rule for when you exit. Everything else is noise. Everything else is your brain trying to feel sophisticated while avoiding the actual work of discipline. Let me show you the only 3 rules that matter, and why every other rule you've added is just an excuse to break these 3. Of course, you can have more than 3 rules or parameters. It doesn't have to be exactly 3. But as the number increases, your likelihood of sabotaging discipline increases rather than ensuring it. Let's begin. Rule number 1. Your setup or nothing. This is the only rule that decides if you take a trade. You have 1 setup, 1 pattern you're looking for, 1 specific configuration of price, structure, and context. If you see it, you trade. If you don't see it, you don't trade. No exceptions. No close enough. No, this looks similar. No, I have a feeling about this one. Your setup or nothing. That's the rule. Most traders have 10 setups. Breakouts and pullbacks and reversals and continuation patterns and divergences. They think having options makes them flexible. It doesn't. It makes them confused. Because when you have 10 setups, you don't have a system. You have 10 different systems you're randomly switching between based on what looks good in the moment. And what looks good in the moment is usually whatever you just saw someone else profit from. This is setup hopping, and it's why you're not improving. So you should have 1 setup, and this should be your first rule. If that setup exists, a trade can happen. If not, there's no need to even think about it. It's that simple. Here's what setup hopping does to you. You spend 3 weeks trading breakouts. You lose. So you switch to pullbacks. You lose. So you switch to reversals. You lose. And each time you switch, you tell yourself you're adapting, you're learning, you're finding what works. But you're not. You're just resetting your learning curve to 0 over and over. Because mastery doesn't come from trying everything. It comes from doing one thing 1,000 times until you understand every variation, every failure mode, every context where it works and doesn't work. You can't get that understanding by switching setups every month. I traded 1 setup for 2 years. The same exact pattern. Daily chart only. I probably took 300 trades on that 1 pattern. And after 300 trades, I could see things that traders with 10 setups couldn't see. I knew when it would fail. I knew when it would run. I knew which variations worked and which were traps. Not because I was smarter, but because I had reps. Deep, focused reps on one thing. That edge doesn't exist if you're spreading your attention across 10 different patterns. Being intermediate level in 10 different patterns doesn't add anything for you. Choose 1 and master it. Add 2 more criteria to it, and you're ready. It's possible to build an effective enough system with just 3 rules. Before we talk about what the other 2 rules should be, let's continue with the first one. Rule number 1 kills your need for variety. And your need for variety is why you're losing. You think trading should be interesting. It shouldn't. It should be repetitive, boring, the same setup showing up again and again. That's what profitable trading looks like. If you're getting bored, it means you're doing it right. I know I keep repeating this in every video, but I want you to internalize this. If you're constantly entertained by new patterns and strategies, you're losing. So rule 1, your setup or nothing. Define it. Write it down. Make it so specific that you can look at any chart and know within 3 seconds if it's your trade or not. 3 seconds. If it takes longer than that, It's not clear enough. Tighten the definition. And once you have it, stop looking for anything else. That's your only trade, forever. Everything else is a distraction designed to pull you away from mastery. Try to see it that way. The market will make a lot of moves to distract you. Don't pay attention. If your setup appears, engage. If not, just watch and learn to be satisfied with that. Rule number 2. Your size or nothing. You risk the same amount on every single trade, not kind of the same. Exactly the same. Same percentage of your account. Same dollar amount. Same number of shares or contracts. Every trade gets the same size. No scaling up because you're confident. No scaling down because you're nervous. No larger positions on setups that look extra good. Your size or nothing. This rule exists because your brain is terrible at judging conviction in the moment. You'll feel super confident on a trade that's about to fail. You'll feel uncertain on a trade that's about to run. Your feelings are not predictive. They're noise. And if you let them control your position size, you'll bet big on losers and small on winners. That's how accounts die. So how a trade makes you feel shouldn't matter. When trying to execute a certain system with discipline, always take fixed risk. Because otherwise, that system can't operate effectively. Being able to take the same risk every time despite your emotions will tell you a new story about yourself. By doing this, you'll actually internalize that you're following your rules instead of acting on your emotions every time. You'll prove to yourself that you keep the promises you make to yourself. And right decisions will bring right decisions. You'll be rewarded for being able to do all this despite everything. I know these rules can sound boring, simple and boring rules, but they truly make a difference. Simple 2 rules like trade 1 pattern, take fixed risk. You can adapt these for yourself. For example, you could add another rule like only trade when the higher time frame is in your favor. And you can determine a single criterion that will interpret what it means for the higher time frame to be in your favor. You can proceed this way. What I'm actually asking you to do is use the most effective rules and get rid of rules that aren't that effective. Because as the number of rules and criteria increases, executing a system correctly becomes harder. So focus on the most necessary ones and eliminate those that make little difference or even no difference at all. Simplify. Simplify your system to make it more executable. That's exactly what I'm trying to explain. Now let's continue with an example. I watched a trader I know blow up doing exactly this. He had a solid system, 55% win rate, good risk reward. Should have been printing money, but he'd scale up his size when he felt conviction, and scale down when he felt uncertain. Sounds logical, right? Trust your gut on the good ones, be careful on the sketchy ones. Except his gut was wrong. He'd see a perfect-looking setup and go 3 times his normal size. It would fail. He'd see a questionable setup and go half size. It would work. After 6 months, he'd actually won more trades than he lost. But his account was down 40% because he kept betting big on the losers and small on the winners. His emotions were inverse to reality, and he didn't even realize it until I showed him the data. Once he fixed his position sizing, locked it to the same amount every trade, his results flipped. Same system, same setups, just consistent size. And suddenly he was profitable. Not because he got better at trading, because he stopped letting his feelings sabotage his edge. It's actually that simple. We're even undermining ourselves by convincing ourselves some trades are better and increasing risk. We're sabotaging our process, but we're not even aware of it. Of course, this doesn't mean increasing risk is always a bad thing. No, it's not. If you have 5 criteria total and you also take setups with 3 criteria, you can take 1% risk on those. You can take 2% risk on setups with 5 criteria. This sounds logical, yes, I'm aware. But my personal recommendation would be not to take 3 criteria setups and only take 5 criteria ones. That way, I'd still take fixed risk and only evaluate more probable setups. Or as another example, let's assume you use your system on both lower and higher time frames. You're both day trading and swing trading. Taking more risk when swing trading wouldn't be illogical. These kinds of flexibilities can be made. Let's continue with Rule 2. Rule 2 kills FOMO, because FOMO makes you oversize. You see a setup and think, this is the one. This is the big move. I should go bigger. And you're wrong. It's not. It's just another trade in a long series of trades. You're making biased interpretations, but you're not aware of it. Some will win, some will lose, and you don't know which is which ahead of time. So you treat them all the same. Your size or nothing. Lock it in. Never deviate. This discipline is harder than it sounds, because your brain will give you very convincing reasons to break it. This setup has more confirmation than usual. This market is stronger than normal. I've won 3 in a row, so I should press my edge. All lies, all traps. Ignore them. Your size or nothing. If the trade is good enough to take, it's good enough at your standard size. If it's not good enough at your standard size, it's not your trade. It's that simple. Rule number 3, your stops or nothing. You define your stop loss before you enter. You place it, and you never move it unless it's to lock in profit. Never. This sounds obvious, but most traders violate this constantly. They set a stop, the trade moves against them, and they think, maybe I was wrong about the level, let me give it more room. So they move the stop further away. The trade keeps going against them. They move it again. Now they're in a losing trade that's twice the size they planned to risk, and they're stuck. Either take a massive loss or hold and hope. Both options are terrible, and both exist because they broke Rule 3. Don't give yourself the message that your stop point is movable, so never do this. Determine it and place it as soon as the trade comes. Then never touch it. No matter what, all of these are actually messages you're giving to your subconscious about who you are. So these are not up for discussion. Don't move stops. Don't do it. Don't wait to place your stop. Place it as soon as you enter the position. In fact, if you're entering with a limit order, set your stop point before you even enter. Not up for discussion. Here's the truth about stops. If price hits your stop, you were wrong. That's it. The trade didn't work. It doesn't matter if you think it might come back. It doesn't matter if you're sure it's just a shakeout. You defined a level where the trade idea is invalidated. Price hit that level. Trade over. Take the loss and move on. But most traders can't do this, because taking a loss feels like failure, and failure feels bad. So they move the stop to avoid feeling bad, which means they're not trading a system anymore. They're managing their emotions. And emotion management is not a trading strategy. It's a path to blowing up. I've never met a successful trader who moves their stops, not one. Every blown account I've seen involved stop moving. It's the most reliable predictor of failure I know. Because moving your stop means you're not following Rule 1 or Rule 2 either. If you were, you wouldn't need to move it. The trade either works from your stop or it doesn't, and if it doesn't, that's fine. You risked your standard size. You take the hit. You wait for the next setup. That's the process. I know some of you might think, these 3 rules aren't effective enough. I actually agree, because the point isn't these specific 3 rules. What are your 3 rules? Understanding this is important. Trading is a personal journey, and you must determine these 3 rules for yourself. I'm not the one to determine them for you. 3 rules are just an example. The number can go up to 5, but personally, I wouldn't recommend more. And if I were starting from scratch today and someone suggested I have 3 rules, thinking about what I'd want them to be, these 3 rules come to mind. First, don't trade unless the higher time frame is in your favor. Have a criterion to determine it's in your favor, not interpretation-based determination. Second, trade a single setup and make this setup as simple as possible. Third, trade this setup at a specific time of day. Master a specific time range during the NY session, for example. Set yourself a 3-hour time window to trade this setup. Master it there. In summary, higher time frame should be in your favor. Have a single setup. Trade it during a specific time range of the day. It would be that simple. 2 more additions can be made to these 3 criteria, but they're quite sufficient criteria for a start. And I shouldn't tell you what your setup should be, because setups are personal. Find the most suitable setup for yourself, and match it with 2 to 3 criteria that will make that setup most effective. That's all. This is how strategy is built from scratch. And not being complicated doesn't mean it's insufficient. Quite the opposite, it means it's sufficient and effectively executable. So why does Rule 3 exist? Let's continue with that. Rule 3 kills revenge trading, because revenge trading is what happens after you take a loss you weren't prepared for. You moved your stop, the trade finally died, and now you're down way more than you should be. So you jump into another trade immediately to make it back. No setup, no plan, just emotion. And you lose again. This spiral destroys traders. But it can't happen if you follow Rule 3, because Rule 3 means every loss is small, planned, and acceptable. You never take a loss that makes you emotional, which means you never enter the revenge cycle, your stops or nothing. Define them. Respect them. Never negotiate with them. 3 rules. That's the system. Your setup or nothing. Your size or nothing. Your stops or nothing. Everything else is optional. You don't need rules for market conditions. Your setup already accounts for that. You don't need rules for confirmation. Your setup already includes the confirmation you need. You don't need rules for when to trade. If your setup appears, you trade. If it doesn't, you don't. The system is complete. And the beauty of 3 rules is you can actually follow them. You can execute 3 rules under pressure. You can remember 3 rules when you're stressed. At the end of the day, you can audit 3 rules and know if you followed them or not. You cannot do this with 50 rules. 50 rules means 50 ways to fail, 50 decisions to make, 50 opportunities for your brain to rationalize breaking the system. There's no such thing as a 50-rule system, of course. I'm deliberately exaggerating the number. But you get the point. The fewer rules, the more chance you have of being disciplined and maintaining it. Don't skip this. Don't keep adding rules to your system to make it better, more effective. I know it seems logical on paper, but unfortunately this isn't realistic or sustainable. Here's what happened when I cut my system from 20 rules to 3. My win rate went up. Not because the rules were better, but because I actually followed them. Before, I'd break rules constantly. Miss a confirmation here. Fudge the entry there. Adjust the stop a bit. I was always kind of following the system, but never exactly, and kind of following a system means you don't have a system. After I simplified to 3 rules, I couldn't fudge anymore. Either I followed them or I didn't. It was binary. And that clarity forced discipline. I went from following my system 60% of the time to 95% of the time. And my results changed immediately. Not because I was trading better setups, because I was actually executing the system I claimed to have, because it was easy to execute. There were few criteria and everything was clear. There wasn't that feeling of rushing like when checking all 20 criteria. I was much more relaxed. Most traders think their problem is finding the right system. It's not. Your problem is executing any system consistently. And you can't execute consistently if the system is complicated. Simplicity is not a weakness. It's the only path to consistency. The traders making real money, the ones who've been profitable for years, they all have simple systems. Absurdly simple. One setup, one time frame, one risk level. They're not juggling 10 strategies. They're not adapting to every market condition. They found one thing that works, and they do it over and over. Forever. That's the secret. Not complexity. Repetition. So here's what you do. Go through your current system. List every rule, every condition, every requirement you have for taking a trade. Now cut it down to 3. 1 rule for what you trade, 1 rule for position size, 1 rule for stops. That's it. Everything else goes in the trash. And I know what you're thinking, but what about this condition? What about that scenario? What if the market does this thing? Doesn't matter. If your 3 rules don't cover it, you don't trade it. You wait for something that does fit. This will feel wrong at first. It'll feel like you're leaving money on the table. You're not. You're leaving traps on the table. The setups that don't fit your 3 rules, those are the ones that would have destroyed your discipline anyway. Let them go. Focus on the 3 rules. Master the 3 rules. And watch what happens when you actually execute a system instead of constantly modifying it. The 3-rule system beats everything, not because it's sophisticated, because it's executable. And execution beats analysis every time. Stop adding rules, start removing them, get down to 3. Your setup or nothing, your size or nothing, your stops or nothing. That's the system. That's all you need. Everything else is complexity pretending to be edge. Cut it out. Follow 3 rules perfectly, and finally see what consistency actually looks like.